Hello everyone, welcome to day 23 of my stock market portfolio. So if we look at my Questrade account, my TFSA dropped a little bit, overall 44.92 Canadian. If we look at the positions, still got my Ford shares. You might have noticed Ford has gone up to 11, almost 11.40, but then dropped again. Right now it's trading at 10.96. Exxon Mobil, same thing, it went up and then dropped again. Right now trading at 74. So Exxon, I'm at a loss position, a small loss position of $7. Ford shares, a small profit position of $11. We look in my RSP account. I got my Ford options that are profitable at $30, but last week they were more profitable. They were at about $120 or $150. So yeah, just gotta be patient. I bought some Dividend 15 Split Corp. It's a mutual fund that pays really high dividends. What they do is that they invest in in big banks, financial institutions, and they write covered calls against their positions to generate a monthly income, and then they share that monthly income with their shareholders. So it's definitely a great mutual fund to explore. I'll put the link at the bottom of the video. It's called the Quadravest. They have all these products listed here, and all of these products pay a pretty good dividend, and it's monthly. It's paid monthly, and like I said, they're able to pay these dividends by writing covered calls on their positions, and they share that income that they generate with their shareholders. The only risk with these mutual funds is that they have a termination period. So for example, let's look at the one I bought. I think it's this one here, DF. Yeah. Also, the distribution isn't always paid out. If the net asset value of the mutual fund drops below 15, they don't pay out the distribution. So for example, in February and March, for this particular mutual fund, they did not pay the distribution. They have two mutual funds. They have a Class A and they have a preferred. The preferred is always paid out, but it's a smaller yield per year. It's about 5 to 6% per year, which is still pretty good. But the Class A share pays about 15% per year. So if you look at the distributions, as you can see, it doesn't always pay out, but most of the time it pays out. So you can see whenever it's empty here, that means that they didn't pay out. So February and March, they didn't pay. But if we look at the stock performance itself, 52-week low is $6 and 52-week high is $9. So I bought it at $6.69. Right now it's trading at $6.61. It's not paying anything right now, but eventually when bank stocks go back up again, it's going to start paying out these monthly distributions that are pretty high. And if the stock itself ever goes up to 8, I could sell, make a profit of 8 divided by 6.69 of 20% plus any monthly distributions I was collecting. So yeah, so the problem with these mutual funds, the only issue with it, so here you can see that these are the stocks, these are the underlying stocks it holds in this particular mutual fund. So you can actually go individually buy these stocks, but the benefit of this mutual fund is because obviously the volume is bigger, they're able to generate a revenue by writing covered calls. So you're getting a much better distribution, a much better dividend payout because of their covered call strategy. But for you to individually do that, you need to buy a lot of shares. So let's go back to the issue I have with this stock is that, there you go, it's got a termination date, Class A shares, termination date of December 1st, 2019. So come December 1st, 2019, they can choose to put an end to this mutual fund, and the payout is, let's say the net asset value is 15. Well, $10 is going to go to the preferred shares, and the difference will go to the Class A shares. So I bought this stock at $6.69, and I could end up with only $5 at the end if they decide to terminate the mutual fund. But based on past performance, they always renew, and that's if at termination date the net asset value is worth 15. If it's worth 20, then I can get $10. But I bought it at $6.61. But anytime between now and termination date, I can sell the mutual fund. So that's the risk element with this mutual fund, but payout is pretty good. So as long as you buy it at a low price, I think it's worth the risk. And they've got many more products. Their most popular one is the DFN.TO. I believe it's this one here. Yeah, DFN. So this is the most popular one. It's the most stable one also. Pays out a good dividend. Look at distribution. I don't think it has missed much. It does not miss distributions. Yeah, so this is definitely a good one to buy at around $10. I think right now it's trading at 10 something. Trading at 10.72. See, it's been paying monthly distributions for 168 consecutive months. So this is definitely a good stock to buy, or a good mutual fund to buy, which is traded on the Toronto Stock Exchange. So you can buy it. 52-week low is 9.57. 52-week high is 11.36. So a 10.50 would be a good price, and you just hold on to it for long term. Keep collecting dividends. So at 10 cents a share, let's say you buy 1,000 right now, divided by 10.75, gives you 93 shares, and you get 10 cents per month. So that's $9 times 12 divided by 1,000. It's about 11% yield per year on this stock. But I bought the other one. I bought the DF.TO because the yield is a bit higher, about 15%. So it's riskier, but because I only had $500 to trade with, so I wanted to take something where there's a bigger payout. So yeah, stock market's going down again. Everything's going down. Looks like another buying opportunity. I don't think it's a crash. I think it's a correction. It's a little inconsistent though with the news. For example, FedEx beat estimates and the stock went down. There's another proof that the stock doesn't necessarily go the same direction as the news. It doesn't directly correlate with the news or good news, for example. So sometimes good news come out, but the stock goes down. The stock goes down, and you don't know why. You don't have that information that can explain why the stock goes down. That's why I don't bother myself with all that research. I just focus on companies with big names, a large market cap, a competitive advantage, product or service that I think is good and is not going to disappear. For example, Facebook right now, the stock is going down because of they gave out sensitive data to a third party company, and stock's going down. But it doesn't change anything about the company's profitability and strategy and direction. It's still a great company, and it's not going anywhere. It's only growing. So for me, Facebook right now is a great buying opportunity, regardless of what's going on. It's when a big name company goes down and their strategy, their operations are the same, doesn't change. It's just a buying opportunity for those who haven't bought. So if I had more money, I would definitely buy some Facebook. Today's lowest was $163, so maybe $164. But if you keep it long term, you could sell it at $200 in 6 months maybe. So definitely a good stock to buy. I think it's gonna reach thousands like Amazon and Google eventually. I don't know in how much time, but eventually. If you look at the full chart, it just goes up. It's been going up since its inception. So it's another Google and Amazon stock, in my opinion, for sure. All right, so if you look at my Investors Edge, I got my Enbridge shares that are absolutely killing me. I bought at 50 and they just keep dropping and dropping. I don't know why. It's a great company. It's one of the biggest market caps in Canada, and there's no bad news coming out on the company. Stock just keeps going down. So obviously there's something going on that the average individual does not know, the average investor does not know. Analyst reports are saying it's a great buy. So right now it's trading in the 38s and I bought at 50. Here, let's look at the reports. So Morningstar analyst, see fair value estimate is $62 and it's trading at 39. The buy recommendation, 12-month target price 41 USD, so it's about 53 Canadian. So seriously, if anyone can explain to me why the stock is going down, I that would be great. Regardless, I still think it's a great buying opportunity. I wish I had more money so that I can buy some more. Although I'm a little disappointed I put in a lot of money into it. So that's a mistake from my part. I didn't stick to my strategy, which is to buy in small amounts. For example, $1,000 at a time. If the stock goes down by more than 10%, I'll buy some more. So what I did with the stock is I put more than $1,000 in one purchase, and then I bought some more when the stock went down by only like 2% or 3%. So I bought several times, once at 50, once at 49.50, once at 48, another time at 45, another time at 42. So I should have, instead of buying back at 49, I should have waited and bought maybe some more at 45, and then again at 40, and not put as much as I did. So that's a mistake from my part. Consequence here is that I'm going to have to wait longer. It's stopping me from buying other stocks that are well priced right now because I put in too much in one place. But at least I'm collecting dividends. It pays out about 5% per year dividends on the stock. And eventually, when it goes back up, I'll sell and make my profit. So the only issue I have is that it's preventing me from buying other stocks because I put too much in it. So other stocks that I want to buy right now is Facebook, of course, Procter and Gamble, Walmart. GE also dropped hard, still a good stock to buy. Here, let's look at GE analyst reports. So a hold consensus, Morningstar, fair value of $21. We got a hold recommendation, 12-month target price of 18. So still a good, still an excellent buying opportunity. Kraft Heinz also is a good buying opportunity. It's going down hard, 62. Wow. I bought this at 75. Definitely should buy some more. Let's see the reports. Fair value 78. Ridiculous. 12-month target price 71. Hold recommendation. I definitely want to buy some more. So yeah, if we look at my holdings, got my Enbridge that I'm losing a lot of money on. Look at my TFSA, intraday changes. Let's look at combined holdings. Alright, so Cenovus is going back up slowly at 11.23. I bought it at 15. Enbridge is trading right now at 38.90. I bought it several times. Once at 50, once at 45, I believe, and once at 42. So it's trading at 38.90 right now. Hudson Bay is going down, 8.84. I bought it at 13.50. General Electric I bought at 17, trading at 13.71. Kraft Heinz is killing me. I bought at 75. It's trading at 61 right now. Let's look at the book value. It's gonna really crush me. Alright, where does it say? So yeah, that's why I prefer Questrade over Investors Edge. The interface is it's not very informative. Like, it doesn't give me the information I want right away. See, right now I want to see my book value. Choose TFSA Canadian. My book value is 849, so this is not even right. Alright, so Enbridge, I'm losing $700 on Enbridge because I put 4,400. Hudson Bay, I'm losing $344. Let's look on the US side. General Electric, I'm losing $200. Kraft Heinz, $379. So yeah, gotta be more patient when you buy and when you sell, of course. But especially when you buy, you gotta buy at a bargain, at a low price. So how do you know what's a low price? I just look at the charts, a 52-week chart. I look at how long it's been trading above a certain amount. If it's been trading, let's say, above $40 for 6 months or a year, that means buying anything below 40 is safe because it was above 40 for a very long time. So it's gonna go back to that price because the general direction of a stock is to go up. If the company's good and you trust in its operations, the general direction is to go back up. So that's how I trade, and it's been working for me for the past 3 years. Right now, yes, I'm showing losses since January. The year's not over. I had opportunities to sell and make a profit, but I wanted to make a higher profit, so I kept the stock. It's just a question of being patient and not putting everything in one place so that you have other buying opportunities when they arise. For example, I really want to buy Kraft Heinz right now, but I'm out of liquidity because I put too much money in Enbridge. So if you want to see the activity of in your Questrade account, go to trading and click on accounts, and then you go to investment account activity, and you can see what went in and what went out of your account. So if you have any questions, leave them in the comments below. If you're gonna open an account with Questrade, please use my referral code so we can both get up to $250. And here's what the structure looks like. So depending on your initial investment, we both get either $25 or $250. If you like my videos, please like, share with your friends, and subscribe to my channel. Thanks for watching.